The SEC rules that implemented Section 407 of Sarbanes-Oxley nearly 20 years ago require companies to disclose in their proxy statement, as incorporated by reference into the Form 10-K, whether the board has determined that the company has at least one financial expert on the audit committee, and if not, why not? Today on Zippy Point. I'm Brock Romanek, and I'm a big fan of yous. So this disclosure about audit committee financial experts is typically in the proxy. The 10-K requires the disclosure too, but that's typically incorporated by reference into the 10-K. I do have a separate Vid-Guide about audit committee disclosures in general in the proxy statement, a link to which is below. So nearly every company discloses that it has an audit committee financial expert under Item 407D5 of Regulation SK, rather than provide the embarrassing disclosure of why it doesn't. And when a company discloses that it does have one, it's required in the proxy to identify the name of the person who is and whether they are considered independent under the listing standards for the stock exchange on which the company's stock is listed. Here are 5 things to know about the audit committee financial expert. 1, qualification seems easy on paper. 2, but figuring out who qualifies isn't always easy. 3, deciding whether to disclose more than one. 4, use questionnaire to conduct annual review. 5, deference by other members to expert. 1, qualification seems easy on paper. So you can see how the definition of audit committee financial expert in item 407 of SK is quite elaborate. Having prior audit experience isn't required, but certainly qualifies a director as a financial expert. A director can also meet the definition if they worked as a CFO or a controller or something akin to that. But the kicker is that item 407 has this catch-all phrase at the end of the definition, other relevant experience. So what is other relevant experience? Some companies have relied on this other relevant experience prong to conclude that the experience gained from being a financial analyst, a finance academic, or experience as a senior financial regulator qualifies someone as an audit committee financial expert. So on paper, more people qualify as an audit committee financial expert than you might think. 2, but figuring out who qualifies isn't always easy. So even though the definition of an audit committee financial expert is laid out in item 407 in painstaking detail, it involves challenging judgment calls more often than you would think. There's a bit of diligence you need to do because you can't just qualify someone based on their bio or on their resume. You have to dig around a little bit. So in the real world, this can be messy. This could just be a nightmare. You might find that you have some audit committee members who don't qualify, but they want to be listed as a financial expert. And then you have the converse, some who do qualify, but they don't want to be listed in the proxy as an expert. These can be hard conversations to have. 3, deciding whether to disclose more than one. The big debate in this area is whether to disclose if you have more than one, whether the board does more than the minimum. Here you see an example from Pfizer where they've disclosed that all their audit committee members qualify as financial experts. So yes, you can have more than one financial expert named in the proxy. Some audit committees go all out and say they have an all financial expert composition, just like Pfizer does. And that could put pressure on the companies in your industry to do the same. So you want to keep tabs on what your peers are disclosing. And if some of your competitors are ramping this up, let your audit committee, your CEO, your board chair, let them know about this in case they want to do the same. The counter argument is simple. Why would we do more than the bare minimum that's required by law? Even if our audit committee has more than one person who qualifies, why would we disclose that? If that is indeed the case at your company and you have more than one that qualifies, but the company only wants to disclose one, it's typically the audit committee chair who gets named in the proxy. And if you do have more than one and disclose that, you're not required to name more than one person. You might have 3 or 4 that qualify, but only 2 want to be named, and that's fine to do. 4, use questionnaire to conduct annual review. So you need to annually kick the tires, check and see whether your audit committee financial experts can still perform in that role. Accounting standards and financial reporting requirements are continuously evolving, and maybe your financial experts have not. So most boards use a tailored questionnaire each year to allow for members of the audit committee to indicate whether they believe that they qualify as a financial expert under item 407 or not. Surprisingly, you may find you get some weird answers. Directors, being the good soldiers they are, often underestimate their qualifications. It's a good problem to have, a good problem of them wanting to be honest. Perhaps they haven't served in that role that originally qualified them as a financial expert for a number of years. Their confidence level has really taken a hit over time. So they think they don't meet item 407 anymore, but they still often do, but sometimes they might not. 5, deference by other members to expert. When the financial expert rules were first adopted 20 years ago, there was a concern that other members of the audit committee would defer too much to this expert because they have this fancy title. And experience over time now, we have 20 years of experience, has shown that that's just not the case, at least not directly. It does happen to some extent because the expert nearly always is the audit committee chair, and other committee members will often take lead from the chair. That's just the way the dynamics of that committee works. But I would step back and say that people don't defer to these experts unless they would naturally defer to that person otherwise. They might have the assertiveness and the knowledge that commands respect. When someone joins a board, in most cases, you know right away where that director is going to fit in the pecking order. Sometimes it might take a little while as they get accustomed to the surroundings before they start really speaking up. This is all just part of human nature.